What if I told you you could tilt the odds of your swing trade in your favour before you even enter the trade? Well, seasonality gives you that edge, and let me show you how. So how does a common swing trading strategy work? Well, very simply, swing traders, they're looking to capture short, medium-term moves, often lasting from a few days to a few weeks. And typically swing traders will combine technical analysis, spotting chart patterns, support resistance levels, with good risk management, setting clear stops and targets, right? Timing is key with a swing trade, and you want to enter when probabilities are looking favourable. And the goal is to ride the swing in price before the trend reverses and the swing moves back against you. So how can seasonality benefit swing traders? There's a few different ways. So the challenge, of course, is even the best technical setups can fail if market conditions are not supportive or the macro conditions are not right. So this is where seasonality comes in, right? Because seasonality gives you patterns in price behavior that repeat at certain times of the year. Now, that can be because of earnings cycles, it could be for accounting reasons, it could be macro events, it could be for taxation reasons. There's a whole variety of reasons where seasonality comes into play. And for a swing trader, that can mean you can filter for moments in the seasonal calendar where a stock, an index, a commodity, or a currency historically performs well. And you can avoid windows where it tends to underperform. So let's just take a look here. If we look at let's look at the S&P 500. Right, we can have a look at this, and we can use the screener, and we can find when these strong seasonal patterns are. And look, there's one, Arch Capital Group. You can see 90% winning trade percentage over this window from 25th of July to 23rd of October, and that returns 6.61%. Very impressive. And you can use the screener to not only look for stocks, you can look for currencies, you can look for commodities. There's a whole range of different instruments that you can use Seasonax to do. So one approach, right, is to build your swing trading strategy just around seasonality. So you might just scan for instruments using strong seasonal patterns and only enter trades during historically favorable windows. Let's say you were looking, let's go back again, S&P 500, let's look at that example we're looking at, Arch Capital Group. You can maybe look at it and say, well, okay, what's the maximum drop during that seasonal swing trade? And you can see that when there was a drop of 16%, it was a losing year. When there was a drop of 8.61%, it was a losing year. So all the other years, when there was a drop, even as high as 10.92%, it still ended up being a winning year, but not by much, very small amount. So what you can maybe do here is you can maybe look at some of the largest drops that were still profitable years. So you can see here it was 8.76%. That was a profit of 10%, or maybe 8.81%. Okay, it was still a very small profit. So straight away you can start to set expectations where your stop loss could be, and also what the maximum rise is, so where your potential take profit might be during this seasonal window. So you can use Seasonax to really finesse your entries, exits, and stops. And of course, when you combine that with technicals on the chart, there might be a really obvious place. If there's a big monthly support level, just 6% below price, you think, oh, that's a good bargain stop area, and potentially gives me great upside to benefit from this sort of 10+% upside that we've had in previous years. That's one approach. Now, another approach is to use seasonality as a validation tool. So maybe you've already spotted a great setup. There's an instrument you really are already buying and want to buy more of, or maybe you're just looking for intraday opportunities on that instrument. Well, let me show you a really good example from my own trading recently. Now, this is silver. There's been so much excitement about silver over the last few weeks and months. For me, what really got me interested in silver was when the gold-silver ratio went over 100. And for me, any time the gold-silver ratio rises more than 100, it's just buy silver. It's a very simple rule for me. And you can see here, the last time gold-silver ratio was over 100, back here in March 2020, over 120. Silver was so cheap, and then there was 100%+ rally in silver. Great trade, one I was in. So as soon as I saw the gold silver ratio back over 100, I knew I wanted to buy. Silver, you can see here some of my markings at the time. This bullish piercing pattern that developed on the weekly chart. That was a great technical setup. I won't go into what the bullish piercing line pattern is now because it will take too long. But you see great bullish piercing line pattern, fantastic support. Then we had a false break of an inside bar here on the weekly chart, another opportunity for longs. And then as price was going up here early June, this is where I looked at Seasonality and I saw, oh look, over the last 25 years, July has been the strongest month for silver. So there's a really strong period coming up. And then started looking into some of the detail, right? So just looking at some of the periods, 62% winning, 2.5% average return to the upside. You know, for early part of July, 68% average, 2.41%. If you just took July as a whole, 66%, 3.49% average return. Strong bias to the upside. Tail really skews to the upside. Look here at that 2020 region, 30+% gain in silver during that period. All right, what was going on at that time? Well, we've just seen, haven't we? That was the time that the gold-silver ratio was back over 100. See, and that was that July period, 2020. Look at those runs. Lovely moves higher. And we're seeing very, very similar kind of price action now. And we're seeing price bursting higher, smashing through resistance level, up, step back, pushing forward. So for me, there was a number of different ways that I used this seasonals to get in as a swing trader. So I had this strong seasonal pattern. Early June, I saw that, you know, when you see the patterns coming, right, you can start entering early, because I can see here I am coming into the end of June. I want to benefit from this, and I'm looking to hold this trade because that's what I'm expecting. And then you can see right here on the daily chart, had this, okay, you can see here early June, you can see here I'm trying to get into these nice pennant pattern. All right, I'm already buying in. Then here I'm buying in again up here. Look what I see as I come into the end of June. Hammer reversal bar, hammer reversal bar, hammer reversal. 3 hammers from a great support level. Perfect, right? I'm long again in silver, pushing up. Then look what happens as we're moving up through July. Nice move higher, right? Get a pullback. I'm like, oh, is that a potential head and shoulders? Fails. Left shoulder, head, right shoulder from clear support. Technically very nice, on balance volume, breaking higher as the pattern breaks. Beautiful. Nice head and shoulders reversal pattern. Look here, get a nice flag pattern, price sharply higher, pull back, breaks higher, on balance volume, moving higher, both of them hitting intraday targets. And now we see a potential head and shoulders pattern trying to form from this level as well. Now also, I'm then looking at silver and thinking, okay, you know, is this a time now to take profit using Seasonax? You can see, you know, once you get into that July, you get that little pullback that can come in early August. Right? Maybe this is a good time to look for weight and to buy into pullbacks. So you can see whether you're a swing trader or any other kind of trader, using Seasonax to validate your trades can help you increase your win probability because you're trading in line with these strong seasonal dynamics. You can sign up here at Seasonax, where you can get access to literally thousands more seasonal insights that are just waiting to be revealed.